Good morning. This is Larry McMillan with a stock market update on Monday, November 6th. So last week was a very strong market rally. It was contained within the downtrend lines, though, that define this bearish trend that's been going on since July. But it was very strong. It was aided by oversold conditions, as well as the October seasonal buy factor that we talked about last week. So now we have to assess. We have several indicators that are turning positive, but the market is about to run into some severe resistance at 4,400, which actually should give us a pretty big clue as to what's going on. So at near 4,400, there's a gap that was left from last September. There's resistance from what was the highs of the market in October. And then that downtrend line that I talked about that began in July, it also is now down at 4,400. So if SPX can break through 4,400 clearly and stay there a couple of days, then that should be the launch of another leg of the bull market. However, in the past, we've seen times when there have been an alignment of bullish factors, but SPX was not in agreement. And usually that alignment cannot force SPX to break out. SPX sort of has a mind of its own. And since it is the price of the market, it is the most important indicator. So we're watching this very closely. If there were to be a failure here at 4,400 and inability to break through, then we're probably going to retrace back all the way to 4,200 pretty quickly, because last week's rise was so swift that it really didn't leave a lot of support in its wake, and it also left three gaps on the chart, the third of which would be filled at 4,200. Meanwhile, equity-only put-call ratios remain split. The standard ratio, which has been on a buy for a while, now looks like the, let's say, smarter ratio because it's right now. The weighted ratio is still clinging to its sell signal, but we did have other buy signals. We had the CBOE equity-only put-call ratio as well as the total put-call ratio. So in general, those put-call ratios have been bullish. It's just the one that remains negative right now. Breadth has been expanding at a tremendous rate in the last week. And as a result, the breadth oscillators are on buy signals, but they're already overbought. Now, that's not necessarily a negative thing. When the market is breaking out to, let's say, a new high, breaking out over a downtrend line, it's important that breadth be overbought, that breadth be very strong. So if we were to break out this week over 4,400, then we want to see these breadth oscillators remain overbought. New highs versus new lows. We finally saw new highs outnumber new lows for 2 days in a row, the last Thursday and Friday. And so that stopped out the long-standing sell signal had been in place from that indicator. Right now, it's neutral. There is no signal there. Meanwhile, VIX, a sell signal stopped out there too when VIX closed below its 200-day moving average. So we still do have the VIX spike peak buy signal in place, and that's doing well so far. That's in place for another couple of weeks or so. So overall, we've seen many of the indicators reverse to buy signals, and we've been trading them in our daily letters and what have you. We are still, though, holding that core bearish position until we see SPX break out over 4,400. If it can't do that, then this downtrend that's been in place since July may still persist for a while. Meanwhile, I invite you to visit our new website, take a look at how things look there, and also to perhaps test out our shorter-term daily newsletters. And meanwhile, have a great week trading.